Hello traders, my name is Tomasz Wiśniewski. I'm a chief analyst in Alpari Research and Analysis, and this is daily analytical report. Let me show you the best trading setup on the market, trading setups on the market, best trading occasions. Well, unfortunately this week has not reached for us, not in terms of the profit, but in terms of the occasions. So I don't see many good trading setups on the market right now. Maybe it will change in the next week, we will see, but as for now on the market I don't see any proper trading occasions. Well, I see just really few of them. Let's start with the chart, not with the charts, but with the calendar. As always, you need to start with the calendar because you need to know what is going to happen from the fundamental point of view. And as you can see, on Thursday, we will have inflation from Eurozone. So super important data for the Euro. Inflation, CPI is crucial right now. It's the most important reading because based on inflation, central banks decide about the future interest rates. So we need to know what inflation is. We have some expectations about this, and if it will be better, it's better for the currency. If it will be smaller, then it's worse for the currency. So data of the day, CPI from Eurozone. As it is as it is the last day of the week, we need to check the calendar for the next week, and it's pretty empty, as you can see. No tier 1 date on Monday. That's normal. Usually Monday is quiet. On Tuesday, just statement, monetary policy statement, and meeting monetary policy statement from Japan, and meeting minutes from Reserve Bank of Australia. Wednesday, surprisingly quiet. Only important data, durable good orders from US. On Thursday, we will have monetary policy meeting accounts from Eurozone. And on Friday important in terms of the Eurozone, because we're going to have PMIs from Eurozone and GDP from Germany. But Friday will be crucial for the Canadian dollar because we have inflation and retail sales. So definitely Friday good for the volatility on the Canadian dollar, but the next week rather quiet. With that being said, let's move to the charts, and we start with the first chart, which is Euro Dollar. Obviously, first three instruments I have for you were already mentioned on the Trading Sniper video, which is already available on our Twitter account, on our YouTube channel. So if you're interested in those three setups, well, I'm gonna explain you this now in a greater detail, even much deeper. But remember that for the future, that half an hour before this webinar, before the daily analytical report, we produced the video, Trading Sniper video, with three best trading occasions on the market. And it's Euro Dollar. Why it's Euro Dollar? Because Euro Dollar most recently, well, at the very beginning of the week, as you can see, broke the 113 support. 113 was super important because it was a support in the end of October and in middle of August. 1.13 is also a psychological barrier, right? So it was broken, and it's normal for the price to test the broken support as a resistance, right? It's absolutely normal. So we got a pullback, and that was a pullback which tested the recent broken support as a resistance. But the price went much deeper than this. And actually 2 days ago, I was telling you about this. Look, we had this pullback, and I said, no. I don't think it's a good idea to sell here. I think the buyers can attack one more time. And they did. But If you think that only coming back above 113 is enough to trade, is enough to open a proper position, then I would not agree with this. Why? Because as you can see, the price is still in a flag. What is a flag? Those red lines is a flag. A flag is a trend continuation pattern, and trend is bearish. Downswing, correction, downswing, correction, downswing, correction. So it's just a correction pattern. We are inside of the flag. What is more, we are below the midterm downtrend line. This downtrend which started from the end of September, from the bounce from 118. As long as we stay below this line, inside of the flag, and the 38.2, which was also an important support here and here and here, and a resistance here and here. As long as we stay inside of the flag, below the red line, and below the blue area here, 38.2 Fibonacci, the sentiment is still negative. We should still see a further downswing. This is my view on euro-dollar. So even despite the fact that we came back above 113, it's not enough for the price to claim the victory, for the buyers to claim the victory. Actually, the price closing below the blue line and below the red support will be a proper sell signal. Now Bitcoin. Well, that is beautiful because 2 days ago Bitcoin made new yearly lows and crashed through the ultimate support. Yesterday we made lower lows, lower highs. Today we try to recover. But let's start from the very beginning. So you should not be surprised here because we are telling you about this descending triangle for quite a long time. I also said that the price, okay, let's go a bit closer. Price moving outside of this triangle here is nothing because it wasn't a breakout to the upside. The price was just pushed outside of this triangle, pushed outside. So we saw general weakness. Well, we didn't see a strength, but we didn't see weakness. So the price just moved outside of the descending triangle. But the weakness came 2 days ago. The price crashed. The price broke the ultimate horizontal support, which first was the resistance in October 2017. Then it was many times repeatedly tested as a support. November, February, June, that's July, August, September, October, and boom. Finally, in November, we have a drop. What is the closest scenario? Well, kind of recovery. Like on euro-dollar, broken support is being tested as a resistance. Bitcoin should not be the same because Bitcoin is following the technical principles. It's following those principles quite right. Descending triangle, downswing flag, downswing flag, downswing correction, downswing, right? So we may experience the pullback towards $6,000 for one Bitcoin. But after this breakout, what is the ultimate target for the sellers here? The ultimate target for the sellers is the blue area. And this is the ultimate support for the Bitcoin and the one and only target for now. This target is slightly below a psychological barrier of $3,000 for one Bitcoin. The price getting there is the new aim. And we will see where is the level of pain of those traders who were buying here. Those 5 crazy weeks. November, December, a year ago. So we're actually celebrating 1 year of this bubble that started here. It was exactly this time last year when it all started. We will see where the level of pain of those people is. Maybe it was already there and they sold, or maybe they will start selling now. But definitely we'll find some guys who will find this area attractive and they will buy Bitcoin looking for profits like those. We will see. At some point, definitely the price of the Bitcoin will start to get interesting. And many people will buy it just for the sake of, just for the purpose of long-term investing, right? Well, me personally, I wouldn't mind owning a Bitcoin. If I had one for the future, like for the next 10 years, I think it wouldn't be a bad idea at all. Like I own a physical gold. So in my opinion, owning a physical gold is quite a good idea. Just for the future, you never know what's gonna happen. It's the way how the value should be stored. So that's Bitcoin, guys. And S&P 500, also we do have a positive, kind of positive situation here. Okay, let me explain you. So buyers try to create the right shoulder of the inverse shoulder pattern. So we do have a left shoulder, head, and a right shoulder. That's just the very beginning of this pattern. This pattern brings the buy signal only when we do have the breakout of the neckline. Neckline in this case is this horizontal resistance here, is this orange area, which connects the lows from the middle of August, this high from 17th of October, and this high from 8th of November. So only the price getting to this checkpoint, so closing above the orange area, will be a proper buy signal. As long as we stay below, there is no buy signal whatsoever, and we should repeat the scenario here. So drop, correction, correction, drop, correction, drop. That's my view on S&P 500. Let's move further. This is super interesting. Canadian dollar to Swiss franc. I really thought that the breakout of this lower line will give us a proper sell signal. But as the price is showing us that it was a false breakout. Right? The price broke to the downside, but it was a false breakout. Instead of going down, the price went higher because that's what the price is doing after the false breakout. Luckily, I didn't have a position here because I would end up on loss, and that would be another time. Well, that's why I don't go for the breakouts, because I got caught in many false breakouts before, like a few years ago. I thought that this strategy is profitable, but the reality showed me that no, it's not the case. Going for the breakouts, or maybe I don't know how to do this. Okay, fair enough. But now I go for the bounces. I try to buy the bounce from the support or sell the bounce from the resistance. I don't go for the breakouts because breakouts repeatedly showed me that there are too many false breakouts on the market, and it's not the best idea to go for the breakouts, at least in my understanding of the breakouts, right? Next one, oil. Oil finally stopped a little bit. We do have a correction. Oil did not stop in a random place because it is an ultimate support created by 61.8 Fibo, created by this bottom from the middle of November, created by those highs from the end of 2016 and the beginning of 2017. So we do have a bounce from the 61.8. We do have a bounce which is shaped like a pennant. If the pennant will be broken, fair enough, we can have a flag or a wedge. The thing is that as long as we stay below this, okay, let's change the color. As long as we stay below this black line, the sentiment is still negative. As long as we stay below 50% Fibo, the sentiment is negative. Actually, as long as we stay below 38.2, the sentiment is negative. That drop was so strong that eventually we should get some kind of a correction, but we'll see how deep this correction will be. For this, we need to check the Fibos and look. Okay, let's change the colors. And look, here on 38.2 we have a combination of bigger 38.2 and smaller 38.2. So this can be a good place for a continuation of the downswing after a correction. Obviously, if we will have a correction. Now gold. Gold is protecting this lower line of the flag, which is good for us because we gained the knowledge that this support is important, that this lower line of the flag is important, right? It's good for us. So there is a downswing, there is a flag, and we have a bounce from the lower line of the flag, but the sentiment is still negative. And the sentiment will be negative as long as we stay below 38.2, which is proved as a super strong resistance. Only the breakout of the 38.2 will bring us a legitimate buy signal on gold. But as for now, we do not have any, and those price swings are promoting the breakout of the lower line of the flag and actually the test of $1,160 for 1 ounce. Australian dollar to Swiss franc, upswing, correction, upswing. We showed you this correction that most probably it will end up with an upswing, and it did. And the price climbed above important resistance here. But for me, there is no important trading signal here yet. Actually, I'm gonna delete it because it's Friday anyway, so I'm gonna do a fresh analysis from the scratch at the beginning of the next week. On the Australian dollar to Japanese yen, also like a flag, channel up, but no, I don't see. Maybe someone who's doing like butterfly patterns or I don't know, any kind of those bats, butterflies and all that crazy animal stuff, maybe they will see something, but I don't use those techniques, so thank you very much. But Australian dollar to American dollar has an interesting trading setup. So first we all see the downtrend, so let's play with the downtrend line. Downtrend line got broken and got recently defended as a support. What is super interesting here is this. That's a left shoulder. That's a head, and that's a right shoulder. If this is an investment shoulder formation, so a super important, popular, and working trend reversal pattern, so this is the neckline. And we bounced from the neckline today again. Yesterday again, and today. Which shows the importance of this resistance. The price closing above the gray area will be a super strong legitimate buy signal for the Australian dollar to American dollar. As long as we stay below, there is no proper trading signal. As you can see, it's also 23.6. What is super nice is that those resistances go in line with the recent price movements, at least 38.2. And 23.6. So 38.2 in case of the breakout of the neckline will be an ultimate target for this upswing, which can create an awesome risk to reward ratio trade. So if you buy here, stop losses for example here on 50 pips and take profit is on 150, 3-to-1 risk to reward ratio. That's a desirable ratio. Now euro to Australian dollar, which is protecting, well, which is trying to come back on this horizontal support, but for me this situation is not major, so goodbye euro to Australian dollar. Euro to Canadian dollar, we broke this flag. I thought that we're gonna get to this horizontal support, but we didn't. But we are still locked in another like not interesting formation, which is a symmetric triangle. We are inside of the symmetric triangle. That's boring, so thank you euro to Canadian dollar. Actually, I'm gonna save time for later, so no, those stay. S&P 500 can go, we will analyze it again. WTI, okay, let's go. Euro to Swiss franc, I had a position here, I had a position, short position, I think somewhere here, and luckily I closed that here on stop profit, because I thought that the price would decline further, but the price did not decline further, the price is reversing. Fair enough, if the price wants to reverse, I will not participate in that with my short position. So my short position got closed on profit, but not this profit that I was expecting, because I was expecting the price from here to drop to those lows. But it did not happen, so what can I do with that? Nothing. Euro to New Zealand dollar. So yes, this support is respected. This support is the place where the price is reversing. Is totally not random. It's a horizontal support created by those lows from January, those lows from June, and those lows from yesterday. The price is having a reversal today. We will see how deep this reversal will be. 23.6 comes to my mind, the first place that we can get this price aiming 23.6. We will see if that will be the case. But goodbye Euro to New Zealand dollar. British pound to Swiss franc. Okay, it's Friday, so we're fighting for the shape of the weekly candle, right? Weekly candle today is more important than the daily one. So let me show you one setup. Bullish candle, bearish candle, small candle in the middle. Okay, gap, small candle in the middle, gap, bearish candle. This is an evening star. Evening star is a legitimate signal to go short, especially if evening star is present on a resistance. Is this a resistance? Kind of. Is this a resistance? Yes. So this evening star is present on 50% Fibo. It's also like a typical correction, downswing correction. Most probably we should see the downswing. So there is a sell signal on the British pound to Swiss franc, or maybe it will be a sell signal when the price will close the day around the current levels. As for the potential target for the drop, I think the pink area looks reasonable. With the risk to reward ratio, well, that can be a nice risk to reward ratio, because for example selling here, stop loss should be on 130 pips more or less, and you can take from the table 600 pips, which makes it a sweet deal. Obviously entering with on a British pound right now, it's not the best idea on the record. Everything because of this Brexit, obviously. So I'm a trader who loves to limit the risk as much as possible, so I try to stay away from the British pound. Cable is on an ultra important horizontal support on the lower line of the descending triangle. In theory, well, price being on a support is not the place to sell. Place to sell will be after the support will be broken. Now you can eventually buy, but the thing is that there is no buy setup here, so the price action is not bullish. Yes, we do have a bounce, but this bounce is not enough to open a long position. So situation is mixed in my opinion. We should not see any changes here. We should not see any changes today. The only changes we'll see will be probably triggered by the Brexit. So it's hard to predict if they will have a deal or no deal, etc. New Zealand dollar to American dollar is testing super important horizontal resistance on 38.2, and this resistance is in line with the support from May 2017. From October, November and December 2017, and highs from the July 2018. So the price is there testing this resistance. First test is negative. Well, first test was negative, second one is kind of too. The price is close to create a double top formation. The double top formation will be triggered only when the price will break the red line. So as long as we stay above the red line, the buying pressure is here, and this setup looks really strong from the price action point of view. Well, not the setup, but let me say that New Zealand dollar looks pretty strong from the price action point of view. The bullish momentum is high, and I think that any reversal, that will be just a short-term correction, short-term pullback. At least that's how I see it. American dollar to Swiss franc tries to break the neckline of this investment shoulder formation. We are unsuccessful this week, which may be a trigger for a short position, but that's not the strongest setup in the world. Actually, cable as well. American dollar to Japanese yen. Also, buyers did not manage to break this horizontal resistance. Keep in mind this horizontal resistance because price closing a week above the red line, this red horizontal resistance, this red line, price closing a day above will be a super strong buy signal. And now American dollar to Russian ruble. We do have a strength of the ruble recently, quite impressive one. And the breakout of this, let's change the color, of this orange area can be a proper sell signal here, so a buy signal for the ruble with the potential target on this area. Let's make it yellow. And now silver. Silver is coming back thanks to gold, which bounced from the lower line of the flag, but the situation in silver is much worse because here we already broke this correction. We made new lows. But yes, silver will not make any significant, like super significant movements, or will not, silver will not choose its own path. It will always follow gold. So when we do have a reversal on gold, there is also a reversal on silver. Well, if you want to buy, no, but first bottom, second bottom, we will have a proper buy signal when the price will break the orange area, which is the neckline of the double bottom formation. And now DAX. So S&P 500 tried a reversal, DAX is trying reversal again. We had a bounce from this neckline. This neckline will be the most important resistance in the midterm, because in the long term, obviously the most important resistance is here, is the long-term downtrend line, long-term neckline. This situation, well, it's still negative because we're below the neckline and this neckline, but sellers still have hope. I'm sorry, buyers still have hope. What buyers think is breakout, bounce, and this. This is ultimate bullish scenario. But if it's gonna happen, well, I don't know. To be honest with you, chances for that are now limited. Let's go for all the instruments again. Euro dollar, that's more of a sell as long as we stay below this area. Bitcoin, sell. Canadian dollar, Swiss franc, that's a buy. Oil, long-term sell. Gold, short-term buy, long-term sell. Australian dollar to American dollar, long-term buy if we will go to this checkpoint. Euro to Swiss franc, nothing. British pound, Swiss franc, long-term sell. New Zealand dollar to American dollar, we will see. American dollar, Japanese yen, we will see. American dollar, Russian ruble, that's a short-term sell. Silver, nothing. And DAX, nothing. So that's what I said. This week we don't have any major setups, just few of them, which I usually mention on the Trading Sniper video. Hopefully the next week will be more interesting in terms of the number of setups. As for now, thank you very much, my dear traders. Have a great weekend ahead. For those who came to learn here as well, now half an hour break, and after that a webinar about the technical analysis, about the candlestick patterns. So I hope I will all see you there. Thanks very much and goodbye.